Hello, Justin from sharepickers.com here, and I thought I'd do this video to have a look at Shell's share price, Royal Dutch Shell B. This is share price. And by the way, a few people have asked me, should I buy Royal Dutch Shell B or Royal Dutch Shell A? Because there's different types of shares. You should buy B, because apparently the A shares are taxed at a Dutch source. I don't really know what that means, but you know what? It doesn't really matter, because even if you buy Royal Dutch Shell B, you'll be paid a dividend in Royal Dutch Shell A scrip shares. So, and it's all about accumulation anyway. So if you reinvest shares, it's good for that, and because you pay you in script, you're not charged by a broker because they pay you directly in shares, which is a good thing. Okay, so let's look at the chart. Here's a 1-year chart of Royal Dutch Shell. Each one of these candles is worth 1 day's price action, and we've had a lot of weakness in the last year. So let's go down to, in fact, let's take it up to 2 years to see where it's come from. And you see a high there of 26 quid, hitting his head on the £26 level and grinding down. There we go. There's the cross there, important cross, the 200-day moving average. And a lot of people will trade on this. They'll say if it's below the 200-day moving average, it's bearish. If it's above that, it's bullish. And this sort of proved right here because it came down £24, bit of a support level. It gapped up there, you see. So a bit of a support level, £24, but it came down through it and it tried to get back above there. Didn't manage it, down 20 quid, which obviously a nice round figure there. I started buying around about here, I think, 20 quid, because I thought strong support levels, normally round figures, didn't hold. Came all the way back down. Now it's £17.70. But look, you could say right now, are we about to see a bit of support here? But there's been false support all throughout. And as you know, at the moment, the oil market, it's suffering from a lack of demand and therefore huge oversupply or massive oversupply, as the International Energy Agency said. But look at this here. So if we get a little chart, you can see, a low there of 1760. And this low on last Friday, it was 1770. So it could be a higher low. You never know. It could rebound from here. But looking at the relative strength, it's on a grind down. So I shouldn't think so. It may go lower. So the thing is, Royal Dutch Shell, they pay now 7% dividend yield. That means if you bought some Royal Dutch Shell, okay, and just reinvested dividends every time they pay on a quarterly basis, by the way, in 11 years, you would double your money if the share price stayed where it was. So that's the power of dividend reinvestment. And it's a lion's share of market return over a long period of time. So if you're not reinvesting dividends, you're not getting that compound interest. So that's why I'm scaling in now. I've been scaling for quite a long time, and I don't mind saying I'm overexposed. About 25% of my portfolio now is in Royal Dutch Shell, and I intend to take that higher because I see an opportunity here. And it's bad news for the oil price at the moment, and and there's no light at the end of the tunnel for the next 6 months. But this is what I think. Depending how low this oil price goes next 6 months will depending how high it rebounds to. And you look at my blog post here, you can see charts of this. Whenever the oil price has gone below $40 a barrel in the last 20 years, it's rebounded strongly. Now it did take a while from 1985 I think to 1993. It held around that level, bouncing between 40 and 60. But then in 2003, it went up to shot up and $146 a barrel. But of course, back then, China, the second biggest consumer of oil, was an industrial nation. I mean, they were consuming 1.85 million barrels of oil a day. Now they consume 10 million barrels of oil a day. But what we have here is oil stocks building up. I mean, oil is stored on tankers, onshore as well. Whenever the oil price is low, people obviously will sell forward. Hopefully, when the price goes up, they'll earn money from it. But let's look back. Why I think this it looks good for Royal Dutch Shell is this, and I don't think there's going to be support here. I think it may go lower, and I see £15. Extreme possibility. It'll go to £13, which was what it peaked down to in 2008, the financial crash when the world was imploding. So let's go to a date range. I don't think it'll get that bad. But let's go back to say 1995 on the chart, and let's do a monthly chart. So each candlestick will be a month. Draw that. Now, look at this. This is very telling here. Look at this. Since 1995, right, there's a 200-day moving average, very strong trending line. Only in 2008, the financial crash. This is when, do you remember that? The world was going to Armageddon. Financial industries and everywhere in the world was imploding. Banks were going through. So if we look at that, even then, the share price did not stay below that 200-day moving average line when the world was imploding. Right now, it's below that. So relatively, oversold. And look at the relative strength here. It's never ever touched that 30 point in that history, and now it has. Now this means basically anything below 30, or especially 20 or below 30, is oversold. They say anything above 70 is overbought, so it's overheating, and it's cooled off too far here. So you could say, right now, there's a good possibility, and also with a 7% dividend, because what happens is when you're getting, and the CEO has confirmed this is his chosen way to give money back to investors is in the dividend, and they've not missed a dividend payment since World War II. So they're going to continue to pay this dividend in some way, and they can afford to do this for a while. And so when you get a dividend of 7%, you will see people coming in taking a share of that, and the lower the price goes, of course, because you've paid dividends paid a certain amount of pence per share. The lower the share price goes, the higher that yield will come. So the lower it goes, it acts as support in some way, dividend, because the lower the share price goes, the more people will buy into it for a high dividend. And that's the way that will work. So to a certain extent, when a CEO commits to a dividend, it's a good thing for the share price because it has some support. So you can see there, it's at an historic low. It's broken the 200-day moving average. It's stayed below that for the month, which is unheard of. Even in the 2008 crash there, it didn't do it. And also relative strength is at an historic low. And these are two major, markers or indicators here that this is oversold. And like I said, if you can see the moving averages, convergence, divergence here, see the blue line? Whenever that's gone, let's look at the last time that happened here, just over in 2008. It wasn't long, I'd say a year or so, until it started recovering when the blue line was at this level. And you will see the blue line there is there. So you could say within the next 6 months, this may start recovering. Maybe too early. Like I said, there's a good support at £15. It did dip to £13 here. So there may be a while yet. But I genuinely think this will sort it out, because what's happening at the moment, the world is oversupplied with oil. And the demand, even though the demand is going up, supply outstrips demand. People are saying demand is going down. It's not. Demand is still rising. You can see in my blog post there, the IEA's, or the International Energy Agency's chart for demand. It is going up, and there's about, I think, 94.5 million barrels of oil a day is used, but we are supplying about, creating 96. So it's about 1.5 million, 2 million barrels a day oversupplied, and this gets stored and stuff. And there's about, the world has enough storage of oil to last about 35 days. So this can change rapidly, and the way it will change is not so much as in current oil producing shutting down wells, big wells, like offshore wells that have had a lot of investment. They won't do that because it's too costly to stop them and restart them. You can't just switch the tap off and switch it back on. It takes months to get them going again. So they'll keep producing oil in these wells, even if they're breaking even or unprofitable, because there's still cash coming in. What will happen is the oil majors will stop basically investing in new oil fields that are too expensive to pull oil out of the ground. So we'll see future supply cutting down, and when that happens, basically what happened in 2003 was the oil price shot up. So listen, I'm like I said, I'm overexposed. You can wait on Royal.Shell and see what happens, and I think you've got plenty of time to wait it out, because I think the next 6 months will be telling. They think 2016 next year, oil production will be flat. It will not increase that much. And then we'll see demand hopefully catching up. But like I said, based on the chart here, I mean, you can see, historic lows, broken that 200-day moving average, relative strength. And also, I mean, you could say even now, maybe we're, at a point where, nice little support there, at a point where we could be seeing a short-term recovery here. Let's go back to the 5-year chart. So, yeah, there we are. Even now, it's a spike down there. Oh, it's an interesting line. Let's extend that line. I've not seen that. So what was that? That was, yeah, look at that. That spiked down there in 2011. I don't know what that was. But it's exactly at the point it is now, 1770-ish, 1761. So maybe that will provide some support. But I think, slowly and surely this will grind. It'll carve out a bottom in the next 6 months, Royal.Shell. And, if you've got shares in this, like you're earning 7% on a quarterly dividend, which is quite nice. So anyway, that's my roundup in Royal.Shell. I'm not going to say that, I'm comfortable at the moment with my exposure. I'm not. I've had some sleepless nights thinking, what have I done? I've overexposed myself to this. But you know what? The last time I did this was in Lloyd's banking shares in 2008. I scaled in like crazy. The share price was going down. And I thought, oh, I'm done. And I nearly put all my portfolio into Lloyd shares. Luckily, I end up tripling my money in 3 years. I don't think it'll happen with this. I think I'll probably double it in the next 2-3 years. But I don't think it triples in the cards. But I think I will double it. So when I go through the thought process of have I overexposed, I have. Yes, but I think you can always be sure of Shell, as the city says. But I think this short-term oil weakness is good for the share price of Shell in the long term. I hope that helps in some way. I'm sorry it's been a bit boring looking at one chart there, but you can read the blog if you want more information. Thanks very much. By the way, if you sign up to my newsletter, and I will be doing a video every now and again. Have a nice week. Hope the markets are kind to you.